Hey folks, it's Shooter. Hey, we're going to go over weekend box scores, primary waves edition. Of course, please review our disclosures at the end of the presentation. Let's jump right into it. We tightened up the format a little bit because I guess a couple of you were. So what we have are two categories now, basically stocks to buy and then stocks to sell. Now, just emphasizing under stocks to sell, these are a combination of they're eligible for covered calls, actually trimming or cutting the position. And one of the alternatives that I particularly like because I can put small pieces on until it starts working is just buy at the money that week's puts. Because I find that works really well for me. Maybe because it's simple. The only thing you have to recognize, if you do the weekly puts, not the monthly, you can still do monthlies as well. But if you do the weekly puts, you want to make sure you sell them by Thursday at noon, because that last day and a half of premium will just decay once the commercials come back into the market. So, all right, IPR has been on the map for a little while here. Nothing's really changed there. Held up really well last week. Intermediate wave one is maybe 136. Then we get a decent back test, maybe the 50-day. So, still nothing has changed on that. Tesla, I'm saying add or continue to scale in from 237, wait for it to pop down a little bit lower. We may get a push down to the speed line, but we would need to see significant market weak. All right, MTR, really nothing has changed. I mean, it backed off a little bit last week, but it looked a heck of a lot better than many charts. That inner primary wave one is in, so our primary wave two is going to come in just a little bit above the 8-day here, so it's right at about done. Now, KKR is absolutely the best looking chart in the book. Even though we came off significantly, we held the breakout. It held trend, so I like it right here. I really do. So even though, I think the markets turn a little bit lower, my bias is bearish. However, I have real outside of the counts, different charts that look nasty. We've seen that before, and the dip buyers come in and pull us out. But KKR is the best looking chart. Okay, now the S&P, count is much deeper at this point, looking for maybe 410. And every single time we break resistance, right, then we're done. So, we were looking for the same thing here on this drawdown. We were looking for the same thing here. We were looking for the same thing here. And never got the follow. So once we got back to what was prior resistance, that became support. Once we got back to prior resistance, became support, broke through it, we continued up higher. The MO, I don't think will change. The only thing is, do we have a catalyst that's going to push us a little further this time? Testing support, sooner or later support is going to break. So that's just my thought. That's one reason I'm suggesting that you hedge. Went into a little more detail in Global Trends ETF, just giving you a breakdown of how to do that. Now, Apple broke trend. We only had two tags of the trend here and here. So it broke trend. So, I think this is an ABC. So I think we see one more leg lower. Okay. So just if you're going to scale here, scale thin, light. Okay. But I would suggest that, if you have an open position, to be selling covered calls. Now, note where I have covered calls listed on the SPY at 453.67, on Apple at 190.69. Just round it to the 190 range. I think that's a safe spot. Now, Nvidia, based on this count, it's a flat out sell for me. 415 to 277. It's too steep. We're below trend support. Okay. Any bounce up to that 420, I would be trimming. There's no reason to hold that risk, especially considering how how chips have weakened, particularly AMD, even though the dips have been getting bought. I think it has to do with China's ban on metals alone. It's just my 2 cents. Now, Microsoft, we've had a covered call alert out on this for a while. You could go a little lower than 340s. You could even sell 320s or 325s maybe, because I do think we break down. Won't get the confirmed breakdown until we get below the 8-day. But it's very often where you have an equal look in ABC where you don't at least get your C, which is right down around the 50-day. So this would be an extended ABC pattern to the downside, which happens more often in weak market. Well, that's what we have for this week, folks. Great trading. Until next time.